Hello and welcome to our news video. Subscribe to our channel and share your comments so that you don't miss any important news. Ether derivatives net flow hits 18-month low, suggesting potential bullish trend, according to crypto analysts. Bitcoin expected to surpass gold by 2030, claims Iron CEO. Missouri considers establishing a Bitcoin strategic reserve fund through legislative proposal. Bitcoin traders brace for impact as massive U.S. jobs report Looms, posing risks to BTC price. Bybit achieves registration with India's Financial Intelligence Unit following $1 million non-compliance settlement. Ether derivatives net flow hits 18-month low, suggesting potential bullish trend, according to crypto analysts. Recent analysis has revealed that the net flow of Ether derivatives has plunged to its lowest point in the past year and a half. This significant drop has not gone unnoticed by the cryptocurrency community, particularly among analysts who expertly monitor market indicators for signals of future price movements. With the current trajectory, there are emerging opinions in the market suggesting a potential bullish trend may be on the horizon for Ethereum, the second largest digital asset by market capitalization. An examination of the data indicates that while the net flow for Ether derivatives has diminished, this situation could potentially indicate an accumulation phase where investors are preparing for an upward price adjustment. Historically, low net flows have often preceded price surges in the cryptocurrency arena. Analysts argue that this could signify that investors are buying and holding their Ether positions, anticipating a market rebound that could introduce renewed interest and price appreciation. In the current environment, where prices have shown susceptibility to various macroeconomic factors, a reduction in derivative net flow can be a critical indicator. It reflects a cautious sentiment among traders, many of whom are opting to maintain their positions rather than engage in aggressive trading strategies. The sentiment is crucial as it shows that stakeholders might opt for a wait-and-see approach, indicating a lack of panic selling even amid turbulent market conditions. Investors are advised to keep a close eye on this evolving scenario, as the historical context of similar market conditions could provide implications for Ethereum's future price actions. While determining a definitive trend is complex due to the multitude of influence factors in the crypto market, the current low net flow could pave the way for a bullish reversal in the coming months. Stakeholders in the Ether ecosystem are encouraged to remain vigilant as the potential for a price increase looms, particularly as other macro factors stabilize in favor of crypto assets. As enthusiasm for decentralized finance and smart contracts persists, Ethereum's underlying technology continues to attract interest, suggesting that despite temporary setbacks, the long-term prognosis may remain optimistic. Investors are urged to analyze these trends with caution while continuing to monitor Ether's price trajectory closely. Bitcoin expected to surpass gold by 2030, claims Iron CEO. In an exciting development for the cryptocurrency world, the CEO of IREN recently affirmed that Bitcoin, the leading digital currency, is poised to surpass gold as the preeminent store of value by the year 2030. This prediction comes amidst increasing discussions within financial and investment circles regarding the long-term viability and role of cryptocurrencies in the global economy. The CEO contends that as digital assets become more mainstream, Bitcoin's unique characteristics, including its scarcity and decentralized nature, will amplify its appeal, solidifying its status as a superior alternative to traditional fiat currencies and even gold itself. The claim rests on several key attributes that Bitcoin possesses. Unlike gold, which has a physical form and is subject to mining and storage expenses, Bitcoin operates on a decentralized network, allowing for transactions without intermediaries. Its supply is capped at 21 million coins, generating a scarcity factor that can drive demand among investors. As more individuals and institutions adopt Bitcoin as part of their investment strategies, its monetary influence is expected to grow significantly, pushing it ahead of gold in popularity among investors seeking safe haven assets. Moreover, the evolution of technology and increased accessibility to cryptocurrencies through various platforms may facilitate a wider acceptance of Bitcoin. The growing wave of institutional investors entering the market and the continuous development of blockchain technology can further bolster Bitcoin's adoption, contributing to its rise in value. Economic uncertainties and inflation concerns are causing investors to look towards alternative assets. In this context, Bitcoin could gain traction as a solid hedge against economic downturns. As the public becomes more informed about the advantages of cryptocurrency investments, the likelihood of Bitcoin capturing greater market share from gold increases. In summary, the predictions made by the Iron CEO highlight a potentially transformative change in the financial landscape over the coming years. With Bitcoin's increasing recognition as a secure and reliable asset, the prospect of it overtaking gold by 2030 is an intriguing development for investors and financial analysts alike, enhancing the conversation around digital currencies and their future roles in global finance. Missouri considers establishing a Bitcoin Strategic Reserve Fund through legislative proposal. In a progressive and innovative move towards cryptocurrency adoption, Missouri has introduced legislation proposing the creation of a strategic reserve fund focused on Bitcoin. Under House Bill 1217, which was introduced by Representative Ben Baker, the state aims to allocate funds specifically for purchasing and holding Bitcoin in a reserve capacity. This landmark initiative could signal a significant shift in the way state governments engage with digital currencies, as they explore new avenues for financial investment and economic growth. The Strategic Reserve Fund would enable Missouri to acquire Bitcoin as a means of diversifying its financial assets and responding to the growing trend of cryptocurrency adoption around the globe. The proposal outlines a detailed framework for how the funds will be managed and the regulatory measures necessary to safeguard these investments. Should this bill pass, Missouri could become one of the pioneering states to formally recognize and integrate Bitcoin into its financial strategies. This legislative action comes against the backdrop of increasing interest in cryptocurrencies as viable investment options, driven by broader public fascination with decentralized finance and blockchain technology. As more investors recognize the potential for Bitcoin as a store of value akin to gold, regulatory bodies and state governments are re-evaluating their stance on cryptocurrency. If approved, the establishment of a Bitcoin Strategic Reserve Fund in Missouri could not only elevate the state's financial resilience but also enhance its reputation as a forward-thinking jurisdiction committed to embracing modern financial technologies. This move could attract more tech-savvy entrepreneurs and investors to the state, fostering an environment that encourages blockchain innovation and economic development. Furthermore, including Bitcoin in the state's reserve strategy may pave the way for similar initiatives in other states, driving a national discourse about cryptoeconomics and the future of money management at the state level. The enactment of House Bill 1217 could potentially catalyze a broader acceptance and integration of cryptocurrencies within governmental financial frameworks, ultimately contributing to a more diversified and robust economic landscape. With this pioneering legislative effort, Missouri is positioning itself at the forefront of the cryptocurrency revolution, demonstrating a willingness to adapt to new economic realities and innovate within the financial sector while recognizing the potential advantages presented by digital assets. Bitcoin traders brace for impact as massive U.S. jobs report looms, posing risks to BTC price. In the realm of cryptocurrency trading, particularly regarding Bitcoin, a significant focus has recently emerged surrounding the upcoming release of crucial employment data in the United States. This data, set to be unveiled soon, has created a palpable sense of anticipation among traders, who are acutely aware of the potential ramifications it may have on the price of Bitcoin. As the financial landscape continues to evolve, the forecasted figures could trigger not only volatility in traditional markets but also induce notable fluctuations in the cryptocurrency sphere. Experts and analysts have indicated that the forthcoming jobs report could be a pivotal moment for Bitcoin and other cryptocurrencies, possibly leading to a risk of a decline in prices, even to levels as low as $95,000. Those invested in Bitcoin and eager to navigate this unpredictable environment are paying close attention to how these figures may influence overall market sentiment. The connection between employment data and Bitcoin's price is particularly relevant given the cryptocurrency's growing acceptance among institutional investors and its increasing correlation with traditional asset classes. Historically, Bitcoin has reacted significantly to macroeconomic indicators, including employment statistics which often influence Federal Reserve policy decisions. A higher-than-expected jobs report may bolster confidence in the U.S. economy, potentially resulting in tighter monetary policies that could adversely affect Bitcoin prices. Therefore, traders are preparing themselves for various scenarios, actively employing risk management strategies to mitigate potential losses. As anticipation builds, the Bitcoin community watches closely, waiting to see how this critical jobs report unfolds and how it will impact market dynamics. The connection between such economic indicators and the performance of Bitcoin underscores the increasing intertwining of cryptocurrency and traditional finance. A careful observation of these developments will be essential for traders aiming to capitalize on potential opportunities or shield themselves from adverse movements within the market. In conclusion, the upcoming jobs report represents a crucial juncture for Bitcoin traders, urging them to stay alert and adaptable as the landscape shifts in response to the evolving economic indicators released from the U.S. labor market. Bibit achieves registration with India's Financial Intelligence Unit following $1 million non-compliance settlement. In a significant development for the cryptocurrency exchange Bibit, the company has successfully completed its registration with India's Financial Intelligence Unit, FIU. This move comes on the heels of a substantial penalty of $1 million that Bibit was required to settle due to previous non-compliance issues. The registration marks a critical step in Bibit's effort to align its operations with the regulatory framework in India while enhancing its commitment to adopting compliance measures that meet global standards. The cryptocurrency industry is undergoing major scrutiny from regulatory bodies around the world, and India is no exception. With the rapid proliferation of digital currencies, authorities have been cracking down on exchanges that fail to meet compliance requirements. Bibit's proactive approach demonstrates its readiness to adhere to regulations established by the Indian government, aiming to foster a secure trading environment for its users. Bibit's decision to formally register with the FIU reflects a growing trend among cryptocurrency exchanges to eliminate compliance-related risks. This necessary step is crucial as it allows the platform to operate lawfully in India, thereby expanding its reach and enhancing trust among its user base. The payment of the $1 million penalty was a pivotal moment for Bybit, urging them to bolster their compliance strategy moving forward, which includes the implementation of stringent Know Your Customer (KYC) protocols and anti-money laundering (AML) practices. The registration not only reassures users in India of Bybit's adherence to regulations but also encourages potential traders who may have been hesitant to engage with the platform due to prior compliance issues. Bybit's enhanced regulatory profile may influence the overall perception of cryptocurrency trading in the Indian market, potentially attracting more users to the exchange. As one of the prominent players in the global cryptocurrency industry, Bybit remains dedicated to maintaining transparency and fostering regulatory compliance while providing users with an innovative trading experience. This latest development is a testament to Bybit's ongoing commitment to advancing the legitimacy of cryptocurrency trading in emerging markets like India. Bybit's registration with the FIU showcases its determination to navigate the evolving landscape of cryptocurrency regulations, paving the way for a future of compliance-driven growth.